Get started. Thank you all for coming for our winning strategies for 2026 real estate investors seminar. I'm Coby Smith, realtor in the area in Maryland and DC, and also real estate developer. I'm the team lead for Chateau Seekers at Keller Williams Capital Properties. And here's a little bit more information about me, but most of you guys already know me already, so we'll go ahead and proceed. The purpose of this session is to discuss Maryland's housing and economic report, understand the market outlook for 2026, identify high potential neighborhoods, learn proven investment strategies, explore opportunities by asset class, and build a personalized action plan for you. So, why real estate investing matters? When real estate investing, you build long-term wealth. You build monthly cash flow. Your tax benefits, you get tax benefits. You hedge against inflation, and you have control over your investments. So I want to let's start off by discussing Maryland Housing and Economic Report. I had an opportunity to review this report and meet with the Maryland Comptroller to discuss it a little bit more. So I want to discuss our key takeaways with you. So first up, Maryland is facing a major housing shortage. Maryland needs 590,000 new homes by 2045, but is only building 18,000 per year. So Maryland needs to be building 30,000 homes per year, but we're only building 18,000. This housing supply has grown much slower than demand, and it's pushing prices up and rents up. So the investor opportunity, the investor takeaway from this is low supply, which leads to strong long-term appreciation and high rent stability. So affordability is also declining. Home prices have risen 60% plus since 2019 across the US. In Maryland, fewer than 50% of households can afford a median priced home, and wage growth is not keeping up with housing costs. So investor opportunity from this is more renters, which will lead to higher occupancy, which leads to a strong rental cash flow. Domestic migration is a real challenge. Between 2010 and 2023, Maryland lost 2.3 million residents to other states and gained 2 million. Since the pandemic, those leaving are now younger, lower, and middle income residents, not just retirees. Residents are moving to states with lower housing costs, including Florida, the Carolinas, Texas, and the investor insight from this, the investor takeaway, is Maryland must fix affordability, creating future incentives, zoning reforms, and pro-development policy will help the development market in Maryland. Housing costs are extremely high. Maryland has one of the highest wage gaps between what people earn and what they need to rent a two-bedroom home. Monthly homeownership costs are higher than most states. Maryland loses residents too. So the investor opportunity here is demand for affordability and workforce housing remains extremely high. So there's demand out there for affordable housing if you're able to build it. Regulation is driving up costs. Maryland is the 6th most regulated state for housing development. Regulation and fees account for 25% of new home construction costs. Slow permitting and restrictive zoning lead to limited new supply. So the investor insights are value add, infill development, and small scale projects become more profitable because large scale development gets slowed down. So supply and demand will stay out of demand and balance. Maryland needs 30,000 permits per year just to catch up, but it's issuing way too few. Other states are building 3 times more housing per capita. The investor opportunity here is long-term shortage means rising rents, short demand or strong demand, and less competition for renovated units. So pretty much overall, the investor takeaways should be limited supply equals stronger appreciation. Declining affordability leads to more renters. More renters lead to a stable cash flow, and policy pressure leads to future incentives for value add and development. So the investor opportunity is investors who buy or build now position themselves ahead of the curve. So next up, let's talk about the macro trends shaping 2026. So pretty much, let's first off discuss rates. It's a hot topic that everyone's always talking about. You're always seeing on Wall Street Journal, all that stuff. Rates are important to buyers and in real estate in general. So let's discuss it. If rates decline, more demand and prices grow. If rates are stable, predictable returns and cash flow focus. If rates rise, discounts and stronger rents. I'm gonna explain what all this means. Let's talk about inventory. If inventory is low, high demand and high prices and strong rents. If inventory is high, that means better pricing and more negotiation. So affordability, what it means for investors. More renters means high prices and high rates push more people out of buying into renting. Renting demand rising means more renters and will equal stronger accountability, occupancy, rising rents, and stable cash flow. Value add and affordable units win. Renovated, reasonably priced units perform best because they meet the highest demand. So let's take this back. So pretty much what this is saying right here is if rates drop, then there's going to be more demand on the market and prices grow. Prices grow because supply and demand. So if there's more demand out there, then the price is going to rise because there's more competition, that more people want it. If rates are stable, if they stay exactly the same where they are now, then that means that it's predictable market. We know what's coming, we know what's happening because rates stay the same. If rates rise, then that means less demand, and that means same amount of supply. We're still in a huge supply deficit right now, so it wouldn't necessarily adjust the price as much as if rates went up. I mean, if rates went down, but you'll see if rates drop and if rates rise, then you'll have less demand out there, and there'll be more opportunity for investors to come in with better deals and negotiate. Vice versa, we've been talking about demand, but inventory, talking about supply now. If there's less supply, then what needs to be met to the demand, which we currently are seeing, then that means prices will continue to go up. If eventually we get to the point where we're making that 30,000 homes per year, then you'll see prices not rising as much. So, targeted demographics for 2026. If you're looking at millennials, then they are delayed buyers, and that leads to a strong rental demand. So if you're looking for a target audience or a target demographic for your whatever type of investment you're doing, and you're specifically looking at millennials, or you're looking for millennials, then you're looking for strong rental demand. If you're looking for specifically Gen Zers, they are renters. They are short term to medium term term rentals. So you'll be looking for another rental type asset. If you're looking for boomers, if you're looking to target boomers, they're currently looking to downsize. So you're looking for a luxury rental opportunity or a more downsized or smaller lot property or a smaller home. If you're looking for essential workers, they are steady workforce housing demand. So that's a great avenue to go if you're looking for consistent, steady, long-term cash flow. So let's focus on local market insights. So let's start off with Washington, D.C. Prices are slightly down year over year, which leads to a better entry points. Inventory is up year over year, which leads to less competition. Rents are strong, which leads to a steady cash flow. Buyer behavior is more selective, which leads to investor opportunity. For Maryland, prices slow year over year, which leads to steady growth. So prices are rising year over year a little bit, and that's showing that there's steady appreciation. Inventory rising year over year, which is good because, like we keep saying, supply is down in Maryland. But inventory is rising year over year. Since COVID, it's been rising. So we aren't necessarily at that 30, but we were less than that 18 at one point. So we are growing, but we need to have that big jump, that 12,000 jump that we need to make, but we're growing. So inventory is rising year over year, which leads to more negotiation power for buyers, for you as an investor that's trying to purchase a property. For rents are growing, which leads to better yields. For buyer behavior, they're slower. The sales are slower right now, and that leads to motivated sellers. So let's dive into Baltimore specifically. Prices are modest growth year over year, which leads to affordable upside. Inventory is increasing year over year, which leads to more value add deals. Rents are rising, which leads to great cash flow. And buyer behavior is strong investor activity, which leads to flip friendly. So let's now talk about hot neighborhoods in Maryland and DC and Baltimore. So hot neighborhoods in Washington, D.C., and what you should look for in these neighborhoods are, you have Hill East, which is hot right now because of the RFK redevelopment project that's going on. You have Tabor Langston, which is affordable and transit focused. You have Anacostia, which is a major investment area right now. You have Noma, which is strong rental demand. And you have Pentworth, which is walkable and value add neighborhood. For Maryland, you have Silver Spring, which you have the Purple Line boost coming right now. Hyattsville, you have affordable and it's an arts area. Bowie, you have schools and stability. College Park, you have student demand because you have University of Maryland right there. Towson, you have strong rental base. You have Towson right there too. Baltimore specifically, you have the Station North Arts and incentives in Station North. Canton, you have high demand waterfront. Highlandtown, you have affordable growth. Port Covington, you have a mega redevelopment. Pigtown, you have affordable and near bio park. Opportunities by asset classes. All right, so single family rentals, they're safe, stable, and long term. Single family rentals provide reliable tenants, steady appreciation, and low maintenance, making them a predictable long term wealth builder. Small multifamily, these are best cash flow. Duplexes and small apartment buildings generate multiple income streams, delivering stronger cash flow and better risk protection than single family homes. Fix and flip. You have value creation. Flips allow investors to force appreciation quickly by renovating undervalued properties and selling for a profit. Short and mid-term rentals. You have high yield. Short and mid-term rentals often earn 2 to 3 times traditional rent by serving travelers, nurses, contractors, and remote workers. So this is like Airbnb Verbo type right here. Mixed use and adaptive reuse. This. You have incentives and higher returns. Converting or operating properties with both residential and commercial components unlocks tax incentives and higher income potential. Small development. Create inventory where supply is low. Building new homes or small multifamily on infill lots lets investors produce much needed housing and capture strong demand driven returns. So, investor strategies for 2026. Buy and hold, cash flow and appreciation. What is it? Buying a property and renting it long term. Why it works. Generates steady monthly cash flow. Builds equity through appreciation over time. Simple, low maintenance strategy for all experience levels. The best plays are single family rentals or small multifamily in stable, affordable neighborhoods with strong rental demand. Next up, we have BRRRR, the BRRRR method. Recycle capital. What is it? It is buy, rehab, rent, refinance, and repeat. Why it works. Forces appreciation through renovation. Allows you to pull your cash back out via refinance. Lets you scale faster with the same starting capital. The best play is value add properties, off market deals in Baltimore and PG County fixer uppers. Fix and flips, fast equity plays. What is it? Buying undervalued properties, renovating it, and reselling quickly. Why it works. Creates instant equity. Strong buyer demand for renovated homes. Profits realized in months, not years. Best plays, Baltimore, row home rehabs, DC or Maryland townhomes under 350,000 ARV. House hacking. This is an entry level strategy. What is it? Live in one part of the property and rent out the rest. Why it works? Reduces or eliminates your monthly housing costs. Uses low down payment loans, FHA or VA. It's easiest way for beginners to start investing. Best play, duplexes, basement apartments, or small multifamily in commuter-friendly neighborhoods. Development. Fill inventory gaps. Like we've been saying earlier, Maryland needs more housing. There's a housing shortage. So development is a great opportunity to do this. It's probably the best avenues to go about doing this. What is it? building new housing or redeveloping land infill lots. Why it works. Demand still outpaces supply in the DMV. New construction commands premium pricing. Cities offer incentives for affordable and infill developments. The best plays are a small lot infill in suburbs, Baltimore TIF zones, or opportunity zones in DC. And if you want to learn more about the Baltimore TIF zones, I did create a video on this. I did have a seminar on this. So just go ahead and comment in the comment section or email me directly and we can chat more about the Baltimore TIF zones. Creative financing, seller finance, DSCR, HELOCs. What is it? Using alternative funding to acquire or control properties. Why it works. Works even when interest rates are high, allows deals with low money down or flexible terms, ideal for investors lacking DTI or perfect credit. Best options, seller financing, subject to financing, DSCR loans, HELOCs, partnerships, private money. So, what can you do next and what should you do next? Next steps. Book a consultation. Let's schedule a one-on-one. Here's the link right here. I'll also put it in the chat. And then and I'll also follow up with the email with it. But let's schedule a one-on-one to figure out your goals and your strategy for 2026 so that we can make a plan to reach them. And also stay connected. Follow me on Instagram, LinkedIn, and Facebook. Here's the tags. I'd love to. I'm always posting on there. I'd love to see you on there. But yeah. So yeah, if anybody has any questions, feel free to put it in the chat or feel free to